we are, and not beginning of a bright new shiny week in the world of uranium. We're going to talk about a few things today. Hopefully try and give the viewers, listeners, readers a little bit of cause for optimism as well. You better maybe start off, because the first session we've done with you, give us a bit of background about how you fit into this little story of ours.
Oh, sure. We've been, I run Purepoint Uranium. We're operate out of Saskatchewan, Canada, up in the Athabasca Basin. We're an exploration company. We've been operating up there for 15, 20 years. We work with a number of the majors up there, and we've been around through the ups and the downs, and now we're back in the ups.
Are we in the ups? It doesn't feel like it in the markets.
No, it doesn't feel like it in the market. I think what we're seeing, we're feeling a lot of optimism, because I think to a large degree, everybody sees that the road we're sitting on is rather stable now. Our footing is solid. Now it's just, have we got a boat that's sturdy enough to make the run of it? But I think optimistically we're seeing where every week there's something coming out that is strengthening the uranium market, that's making it a better place to be in. We're just happy to be here, but yeah, it's not necessarily reflected in the equities yet.
But tell me about this, right? There's always, you're saying, and I kind of agree with you, there's always something to talk about. I've been talking about uranium for 5 years now, but I'm not quite sure what's important and what's not anymore, because catalyst moments seem to come and go. There's things that happen out there in the market which should strengthen the story further. We've had quite a run of it for the last 5 years in terms of, we started off in 2019. Yeah, the demand side of the story seems to, be really, really robust. But again, I'm not quite sure how it's reflected for the, uranium juniors. I mean, what do you do about it?
Yeah, but it's also been kind of bumpy on the supply side, because nobody's really sure what because every week, like I say, something else happens that makes it a little odd. There's a coup in Niger. There's an attack on Ukraine. There's new taxes in Kazakhstan, and it's doing a lot of funny things to what is a very small market. So we look at some of the things that we have to do in North America, or that the United States have to do to shore up their supply. As you say, as the demand keeps growing, it's changing. It's a lot different than it was 10 years ago. For them to reach out and get what they need.
But how do I play this market, right? Because if I look at the US, right, the US is doing a lot, saying a lot. There's, there's billions being made available. The Department of Energy has, issued a 3.4 billion request for proposals. Biden with his IRA and all these other kind of funds being made available for downstream nuclear. I'm kind of interested in, when do the upstream guys benefit from this? Because there's not a lot of players.
Yeah, but it's going to keep getting tighter and tighter on the supply side, and I think the U.S. can throw as much money as they want to domestically to try and create more fuel, but it's not necessarily there, and it's certainly not there in the volume that they need. We really need to see, they need to be reaching out to Australia, up to Canada, because that's where their uranium is going to come from. Kazakhstan and those countries, they're not going to have access to it. I think 90% of Kazakhstan's uranium is already tied up with China and Russia. So we're going to wind up with funny pricing around the world. We're going to wind up with, it's really more about access to the fuel than it is even the price of the fuel.
But tell me about that. How does Canada behave? Because we've seen Trudeau's government, have conversations with various parties about oil sands, right? Lots of chats, then nothing. No, you can't have that. How is the Canadian government going to react to the demands of the US for this, baseload energy?
I don't know whether they have been properly yet, to be honest. We have a regulation that's been enforced forever that's so outdated that would say that 51% of any uranium mine in Canada has to be domestically owned. And they've been talking about getting rid of that forever, because it historically kept all kinds of players out of the game. Japan used to have a lot of foothold in Canada in uranium and exploration, and they've had to just back away. But it's things like that are kicking around that would make you think that, well, they're really not paying attention. And although provincially we do see investment in nuclear in general, the federal government really does seem to have let it drift away.
But what's the workaround to that, right? Exactly. Canadian government seem to want to, control who owns it, but that doesn't necessarily mean they've got to control who gets it. So
No.
a few things got to happen here. The Canadian government needs to make it easier for Canadian companies to produce, remove the red tape, make more money available, maybe be open for, cross-border partnerships, etc. But at the moment, it just feels like hard work for Canadian miners.
Well, it is, because it takes a lot of money. We've talked about this before. It does take a lot of money, and the system, the way it is set up, the people that are out there looking for it don't have that much money to spend at any particular point in time. So, and the majors aren't necessarily investing the way they should be sometimes. Now, I think that's changing. That is shifting as the environment shifts. I think we're going to see companies like Uranium. They're going to have to start spending a lot more money in exploration here, there, and everywhere, because they've lost a lot of their assets over the last few years. They've stepped out of Australia. They've lost their mine in Niger. They've got a project up in Nunavut in Canada, but the cost of that thing is 3 times what it would be anywhere else on the planet. So we need to start seeing the industry actually investing more, I think, to a large degree in uranium and in the fuel.
What industry? The nuclear industry?
Well, the mining industry. The mining industry itself.
Well, how? Mining industry is stretched. It kind of sucks at the moment. If you're a producer, you're buying other producing companies or merging with equals of other producing companies. What you're not doing is drip feeding that money down into the exploration, the finding of this stuff, which is the important bit, guys. And it's also a very small industry. We keep seeing those charts where
that I think is the crux of it.
Yeah. Thank you very much.
It's the size that causes the problem. I mean, let's face it, 70% of the entire industry is Cameco in Kazakhstan. And Cameco's got plenty, thanks. They can sit there and play with the dial and do what they want with the market. Everybody else is kind of treading water, waiting for it to come.
But don't you think as they should? Cameco's business is Cameco's business. They're not here to do everyone else a favor. So unless governments incentivize them, not just with money and making maybe a bit easier, but just say, look, hey, we've got the know-how. We can get after this stuff, but you're going to have to think about new ways of financing this thing, because I'm not going to destroy my shareholder base by issuing more shares. It's insane.
And they're not doing that yet. I don't think they're doing it in Canada. I don't think they're doing it in Australia, which is where, that's where half this stuff is sitting right now. And no, the government has not picked up the mantle and said, okay, we got an opportunity here, let alone a responsibility to make this industry go.
Right. But again, it comes back to things. So what's the incentive for the companies or people with the experience to do this? Because if you got governments, looking at the kind of the downstream stuff and saying, well, it's the enrichment stuff that we need to take care of, as they do, but rather than go holistically, well, we need the kind of source material, the uranium, to enrich. So let's secure that. They're not doing that yet. It feels like it makes it hard. Makes it really hard for guys like you,
because it's all greenfield exploration that we're doing for the most part. We know where all the stuff is right now that's been found. There's none available to be bought and sold and what have you. Everybody that's got uranium or that's in the exploration side is starting from a dead cold start to a large degree. Unless you've been around for a while. I mean, there's a few of us out there that have been, we've been making the investment over a lot of years, and we can start narrowing in on things. But it's tough to get a foothold into it. And
what gives here, Chris? Because if you think about, I think we're saying it's going to be tough for industry to react anytime soon because they just haven't got the deep enough pockets here. But then you've got groups like Bill Gates, in Wyoming with their project. Money seems like no object to those guys, but again, they're so focused on the technology rather than the source material.
That's right.
That perhaps they're missing a trick. It feels like one of these big banks could come along with it, $10 billion and say, well, we'll just buy up most of this sector and get things going again, but they won't.
There's nothing to buy. And we've seen this time and time again. I mean, we saw it the last time around when every country in the planet was wandering into Canada, going, "What do you got for us?" And it was like, "Well, nothing unless you want to start from scratch or play the game we have to play." And so, yeah, it's a bit of a head scratcher, and they're creating the demand. They're focused on the demand of nuclear in general. And yeah, it's very quickly we're going to realize that we've got nothing to fuel it with.
Well, I think that's the discussion. The discussion we're having is that, like, you look at the geopolitics in terms of the demand drivers from China, from the US, from France, from India, Belgium, UK. I should say, you name it. There's probably barely any countries on the planet who aren't using nuclear, thinking of using nuclear, wanting to use nuclear, and they're having to cozy up either with Chinese or Russian technology or Westinghouse, which seems to have woken up finally, and make some choices there. So the demand side, I feel very, very comfortable with. There are things there which are obviously, in terms of, as you say, on the supply side, which is slightly more nerve-wracking, and they're the real head scratchers for me. You've got energy crisis, which we've just come off of, caused by Russia-Ukraine situation here in Europe, supply chain issues with COVID, etc., and not a lot of countries capable of supplying. We've got Namibia, which is obviously been around. They seem to be doing okay. Niger is real well. What the heck is going on there at the moment? Canada on go slow, and the US with not a lot of pounds in the ground. It seems, certainly not unless someone goes and does a roll up of this thing.
Who has the financial impetus to really go after this? And it's going to be the nuclear industry, right? If I'm building reactors and I can't get a hold of fuel, then I'm going to have to make that investment. And that's what Orano or Kojima or whatever they called themselves lately. That was their game. The only reason they were in the mining business was because if you bought a reactor, they supplied the fuel. And it's kind of getting back to that game. I can't sell a reactor if I can't tell people where they're going to get the fuel from. And remember the other corner of the map that got early on was the oil companies, right? They were the ones that also back in the 70s and 80s, they were the ones that started looking for uranium before anybody was, because they thought people were pulling away from oil, which they are now anyways. So there's two industries that may be forced to, start making that, or make a bigger investment in this than anybody is right now. But the countries themselves just don't seem to be able to get behind it.
Do you think the oil companies are the savior to this? Because there's that chart which kind of comes out every now and again about the size of the oil market in relation to all the kind of mining metals, the iron ore, gold, etc. It's like 3 times the size of the mining market,
the oil market. Yeah.
If they rebalance themselves and change the narrative through to we're an energy company, and I think they could quite plausibly, definitely talk about nuclear energy as green again, like greener than oil.
They're all shifting to electric cars, so now we have to generate electricity.
Yeah, but they've got a lot of money.
That's the new gas.
They got a lot of money.
It's a lot of money. Yeah, it's a lot. It's a different spend than they're used to spending too. We started out life with one of our board members who was an oil analyst, and it blew him away. It blew him away the small amount of money that was being spent on exploration relative to oil. But certainly, with oil, you poke a hole in the ground, you're going to hit something, because that's why you poke the hole there. And once you do poke a hole in it, 5 minutes later, you're pumping it out of the ground. Whereas the game we play in mining and hard rock is a very different long lead time. So that was shocking to him. But it's they may be the ones that have the need to get out and find fuel of a different kind.
Well, okay, it sounds like a very negative conversation so far. But I tell you what, if I'm an investor in the uranium space, I'm probably quite pleased about all of this, because it says scarcity will drive price higher.
Oh, well, yeah. Yes, this is all good news for us.
This is all good news, right?
So that's That's why I said when I came out of the gate, I mean, we feel like we're on a very, very stable bridge here. The ground is solidly under our feet, and nothing's going to fall away in the near term that we can see. So it's not a bad place to be from that perspective, because typically in this market, you never know what's coming around the corner. Yeah. From any angle.
Well, I guess therein lies the opportunity, right? Because it's one of those things that you kind of, I think one of the first investment lessons I learned was, it's about land, because, growing populations, etc. You buy up land because someone's going to want to build on eventually, and it kind of feels like there's a kind of land grab here for uranium, but there will come to there's better land than others. There will be better assets than others. You're a portfolio builder. You stake a lot of land. You've seen a lot of good, the bad, and the ugly. Do you see that as irrelevant for investors because uranium's going to be in demand?
No, it's not irrelevant. It's not irrelevant. We're seeing. I mean, we were fortunate in that our partnerships with Cameco and Orano kind of kept us afloat during the slow times. But what it also allowed us to do was hang on to a fairly attractive land position. As we say, northern Saskatchewan is not just a big flat piece of uranium up there. So it does matter where you are and how you are, and you can go abroad and come up with new theories and new whatever. But where you really want to be is right in downtown Uraniumville, where everybody else has found stuff, because that's where you find more. And so we've been fortunate that we have those projects, and there's been significant investment made in them, so that we've been able to kind of focus in on exactly where we go next. And it does get a lot of interest. So we have, once uranium started hopping up, I think we were all getting phone calls as to who had property that they could give up. But we do find ourselves in a very fortunate situation that we do have, what would be considered very, very valuable property, despite the fact that there's not a deposit on it yet. But it is exactly where one would hope to be looking.
Well, let's talk about that, because I find that interesting. Certainly if you look at the last cycle, we went from 50 companies to 500 companies, uranium companies, this is. It's starting to happen again. We're getting the Aussies looking into US assets, Canadian assets. There's a bit of M&A, lots of spin-outs, JVs, etc. Quality is important, because I always say to people jokingly, it's like companies don't give away their good stuff, right? That doesn't happen. So you've got to sort of question, why would someone either sell it? I'd question the asset. If they JV with it, maybe it's a budget, and you've got a couple of JVs, Cameco and Orano. That's a question of, well, let's get someone else's balance sheet onto this thing so we can actually, move the thing forward. I understand that. Spin outs, I sort of get it if it goes into a decent vehicle, which is like, get one, access to money, but two, sort of good intent rather than just playing the market. And I mean, you've seen a few fun and games out there in your time, I suspect.
Well, and we've talked about these numbers before as well. I think the last 20 years has been about $3 billion spent on looking for uranium up there. And but we found uranium, right? There's been about 700 million pounds of uranium, newly identified uranium found up there. And it's by a handful of companies that people would know. It hasn't necessarily been by the new guy on the block, and it's only been after substantial amounts of money have been invested narrowing things down. I mean, what we do have learned over the years is that you want to, as you pick up new projects and new property, you want to get rid of as much of it as you can, as quickly as you can, and as cheaply as you can. And there's ways of doing that, but it does require a fair amount of money, and it's far more money than you spend drilling. Hopefully. We've seen some. I think the most recent discovery would have been probably F3 had their recent discovery. But if you look at that project, before they made the discovery, they only spent about a third of the money they spent on it on drilling. So there is so much preliminary work that needs to be done to understand the area and to focus things down, so that you're not just walking around prospecting with a drill. And that's the money that's somewhat hard to find sometimes. So yeah, geography matters, that you're in the right neighborhood and that you you can demonstrate that you're in the right neighborhood and on the right trends and close enough to stuff that there might be more, because it is being found on a fairly regular basis. But you have to have the money to really narrow it down. And, it kind of makes it a little easier to figure out who the next guys might be, because you just look at who spent the money and where they've been spending it, right? You spend a lot of money on the ones that you think are the most prospective, and you get rid of the ones that you don't, and you try and spend as little money on those as you can. So it's a process. It's a process, and unfortunately, investors really get interested or only hear about this stuff when somebody actually pokes a hole through a deposit. So they're looking for, that's the first time half of them are paying attention to what's going on these things, as they see a really good drill hole come out of the ground. But any one of those good drill holes has been preceded by probably years of investigation and exploration and geophysics and surveying and sampling, and before you get to that point.
But it just takes a long time, because I'd come back to your point about the oil analyst. It's like, oh my goodness, this takes a long time to get somewhere. It kind of feels like oil, which I used to do, oil and gas. As an investment banker, it would be a case of you get your 2D, your 3D seismic. We've got a sense of what's there, because there's a lot of known data already, and it's a question of, let's put a drill in, see what we get, and you gather all your data from that, and you go, right, I think we're good to go now, and we can sell from wellhead within 12 months. That's I've seen it happen,
Sure.
in Africa.
Sure.
Why is mining so much more complicated and slow?
Well, because we can't see into the ground like you can for oil. I mean, there's no geophysics that picks up uranium. You bury it 6 feet in the ground, and you can't pick it up with a Geiger counter or a scintillometer at all. So you're looking for clues, which is makes it even more difficult. So I mean, most of the holes that get poked in the ground come up with about that much uranium. When you hit something, you got to chase it. I think it was Denison's, Phoenix discovery. If you look at the numbers, they hit their discovery hole was hole 249.
Wow,
man, you gotta have a pretty steady hand to write that check.
Yeah,
one more drill hole, please. It's that kind of a situation, but it's the only way to find it. So and we do everything we can to minimize the costs and to have respect for the capital we're dealing with, and spend it wisely, and spend it in a way that is going to get us to a discovery faster than not. But we're typically doing stuff that the market finds very boring and not exciting. So it's it's quite a balance to get to that hole.
Well, it is, and like I say, so you need a steady hand and unwavering belief in your thesis that the supply is never going to meet, or it's going to be a long time coming before it meets.
And you don't want to be just following a thesis. You very quickly want to get beyond the thesis, right?
Yeah,
you want to be chasing something, right? And there are things that we know we can chase, so you want to do as much upfront work before you poke a hole in the ground. But even when you poke a hole in the ground, that's helping you reconcile what you've been seeing from surface, and hopefully giving you something you can start following.
Absolutely. No, I mean, the thesis I was talking about is the thesis for uranium as an energy source. Your thesis is about when I've got a land package and we've done enough sort of surface work to actually start poking a few holes in where it starts, the money starts adding up, and we think we can make a discovery. I mean, that's the arbiter of success, really, initially, before you then have to worry about economic success. So yeah, it's kind of painful. I mean, if again with your kind of portfolio approach, you mentioned some numbers there, which I think are interesting, in the sense that you need to spend a ton of money. What did you say the number was? About $3 billion spent in Athabasca over what time frame?
Sure, but that was spent by hundreds of companies too.
Right. Yeah. So they're not all going to be successful, right?
And there were six discoveries, so 6 winners. It's a game of bingo. But again, it wasn't found by the new guy who wandered in and poked a hole in the ground. It was found after. I mean, if you look at the balance sheets of these companies back just before they made their discoveries, they had spent $65+ million just getting to that first hole and that discovery hole. And that discovery hole was after dozens and dozens of non-discovery holes. So it's a process, but there's no other way to get there. So it's that, demand for on the supply side, the demand for this product it has to get significantly greater than other normal products, if you will, before it will start. We'll see the money that is needed to really go out there and start finding it. I mean, if you look back in time, specifically in the basin, I mean, the basin's crazy prolific. It's not just the ore grade. I mean, in the last 6 decades, there's been a new discovery made every year and a half.
Is that right? Okay.
It's out there, but it's getting harder. The easy stuff's been found. It's getting harder, but it's still out there. And every time they find something, it's completely different than the thing before it.
Okay. And what I just want to be clear on what discovery means, because I think some people have done the one hole wonder and gone, we made a discovery, which later turns out to be mineralization. So how would you define discovery?
Well, you only know discovery in
hindsight.
You only know it's a discovery hole years later.
Yeah.
It's we all throw the term around, and I'm not gonna lie, we throw the term around. The fact is, we've hit some really, really good stuff, and we followed it up, and it only went so far, so we had to move on. Had it turned into something more significant, then that would have been our discovery hole. But in the absence of a deposit, it's not. So yeah, you don't know until you can only know it in hindsight. I think.
I think I spoke to some companies who've made the discovery that they're not very good at making discoveries and turned into prospectors. So that's the only discovery they've made. Facetious but true. Okay, can we just take a look at the kind of broader market? And, in terms of, you've said the people most likely to make discoveries and find stuff, people who've been around the block, who've done it before, who understand the process. Not the new guy, but there are a lot of new guys coming through, and they're picking up anything
and you
just
can't
to start a process.
Discount them either.
Right.
Because a lot of these new guys have been around. They were with somebody else and they've moved. I mean, it's a small industry, and the people get shuffled around as quickly as anything else. So it's not that you're always dealing with a brand new crowd. There's a lot of bright people out there starting up new companies and looking. And yes, they're picking up property that has that somebody spent a lot of money on in many cases. So there is a starting point. You're not just wandering out into a pasture and saying, let's see what's here. You've picked it up for a reason. But it's just shocking how you will find stuff after the fact that you didn't know before. I mean, look at ISO Energy. They're sitting on the highest grade deposit on the planet. And it was a project that Cameco was done with. Right. It was their project. We're next door to it. And, they worked that whole corridor, and, it warms right up onto our property, actually, in a way that we haven't been up there. We've only just started drilling up there, and we're only really focusing on it now because of what was found right next door that trends up. But having said that, ISO bought that property from Cameco because Cameco thought they'd, explored it adequately and that there was nothing there. And lo and behold, there was something there, but it was so small because it was so high grade. They missed it. So there's stuff out there to be found. And so, again, I don't want to discount anybody that's just starting out new in the basin, because they can be picking up a property that's had a fair amount of work on it, it was dropped because somebody couldn't get any more money to keep working it, and they left it too early. That stuff has been out there.
And what are just looking around the market, I think we're seeing a lot of M&A. We all see, Paladin recently. We saw Boss, Paladin was fishing. You saw Boss and Encore. We've seen ISO, the various versions of ISO, it seems,
Right.
coming together with
Yeah,
consolidated uranium. So M&A definitely seems a big part of what the future of this space holds, in which case that is something different from last time around. And maybe we
it
won't
is.
see
And
that
I think
rush.
it's because we started talking about it, it's because of the amount of money that you need. You need size to get the money. And so I think a lot of this is based on we just need size. Otherwise, we can't afford to do what we're trying to do here.
Are there any models out there that you're sort of saying which you're interested in? Because obviously you go from um, staking and prospecting and maybe a bit of exploration. And in your case, you also bolt on partnership with two of the largest companies in the world. But for others, they kind of go through exploration, they get into the development phase, and they then try and work out how they get this thing into production. Different levels of success on African continent versus North America, for sure, in terms of time to market, etc. But is there anything that sort of stands out for you that you like the look of at the moment?
Well, it's what I will say is that I think what we've seen is that you need to be focused on one stage of what you're working on as well. I think I look at Denison, and for years they did so much exploration and so much. They were a developer, and then they owned the mill, and they had a whole bunch of stuff. And it almost appeared that they were trying to set themselves up as a small Cameco. But the market didn't understand where the value was. Like, how do I value this and all of this? And so that's tough. And yeah, you look at an ISO now, who was an exploration company, but now they're the developer, and they're not just a developer in Canada. They're down in the States, and they're in Quebec, and they're here, there, and everywhere. So it does get difficult, to get some focus. And we continue to talk to people in our space about putting things together, and in many cases it's about putting things together because the package needs to be put together. One of the challenges that ISO has with the Hurricane deposit is that it sits right on the claim line, and on the other side is Cameco drilling like mad. And that's what happens in this space, because some of these claims are just so small, and some of these properties, that you really haven't got any elbow room to do what you need to do. And so there's a lot of discussion around joint ventures and things where you can put bigger packages together, where you can really look at it properly and look at the data in a different way. But I think we'll probably see more M&A going on in my space than we have historically, because it hasn't made sense before.
Yeah, I hope so. I do hope so, because it feels like there's a lot of companies which are cash constrained. It's related to it a few times here. Just take a fair bit of money. You got to get after this stuff to be able to make these discoveries. It's a numbers game at some point. How many holes in the right part of the world are you able to drill? If you're cash constrained, nothing's going to happen. You're going to sit and dilute the heck out of yourself, just keeping the lights on. So, which is what we've seen. Then again, jurisdictions which kind of sort of stand out to you. We've named a few, few of the big players there. ISO Energy and I always think that ISO Energies are sort of the next Denison in that sort of way. They're looking at that kind of M&A approach to getting the scale to allow them to do the things they want to do. It's a North American company, all good stuff. But there's also a whole bunch of stuff going on down in the US. Wyoming seems to be, capturing much of the headlines at the moment. Bill Gates is down there. Lots of small projects down there, but maybe that needs a roll up.
It could, because there is a lot of historic projects that are now being relooked at, and rightly so. But again, because of the nature of them and the size of them and the grade of them and those sorts of things, you're right. They will need to come together in some way. It's the cost of putting a mill together that is that makes these things up, and they're not economic independent of each other. And we know there's only one mill down there now, and it's pumping out rare earths. So
amongst other things.
Yeah.
White Mesa, I think. Mark is he's very keen. I was asking someone to say, I am a uranium company. We happen to be doing rare earths as well, but they've got a very big plant to feed. So I think that's what he would always return to. But you're right. It's like, well, there's White Mesa. I think Anfield has been talking a good game about getting their plant back up and running for whatever, $50 million for a long time now, but they got to get on and do it. UBC talking a good game, but they've got to get on and do it. Or the US is going to be, I don't know.
Now we're seeing a lot of UEC up in Canada now. So they bought UEX, and they're starting to do a lot of work up there that we hadn't seen until recently. So they're looking. But again, all that stuff's ISL, right? That they've been doing in the US. It's the hard rock stuff, which is opening up in Wyoming. And back in the old Uravan district as well, down Colorado. It's all hard rock. So without a mill, you're kind of hooped. So it's
well, or you're going to pay the piper. In this case, Mark Chalmers.
That's true. But you have but I mean, it's to a degree. He can't service enough to keep the U.S. lights on. So I mean, that thing can only move so much. So
luckily they don't produce a lot. Luckily they don't produce a lot. So that's
they've got room. They got a lot of room. You're not going to be dragging rock all over the place. I mean, the stuff that Consolidated Uranium bought from Energy Fuels, if you recall. I mean, we did look at those projects, and they're too far a distance away from White Mesa to be processed there. So I mean, there is a distance thing as well. You can't be hauling rock across the country to
But isn't
be
that
processed
literally
elsewhere.
what they're proposing, though? Isn't that literally what they're proposing? Because I think the deal is Energy Fuels mines it and then processes it.
Yeah, well, we'll see how well that goes. I mean, the transportation costs are crazy. I mean, well, we looked at it. Now, again, it depends on the price of uranium. But the transportation costs are make or break that project. And I also think they're licensed up there if they could build one. And we're talking to some folks up in Wyoming that are doing different things as well. There's a company called DISA that I don't know if you recall this ablation technology, Western Uranium.
Western Uranium, so underground ablation.
Yeah. But these guys actually picked up the IP, like they own the IP, and they've advanced it significantly, and they've been using it more for recycling. So they are using it to refurbish for the indigenous reserves down there who were sitting on all these tailings. But they're seriously considering a mill.
Okay.
Because they've got all this product that they need to do something with, and they've got enough of it that they could be, it could be economic. So, but all these things have to come together, right? It's not one. I think to your earlier point, there has to be some consolidation of assets.
Consolidation of assets, and also introduction of new capital, and perhaps that is less sensitive to the market. I mean, I'll look at that DISA stuff. I mean, I have to say, when George was talking to me about the ablation stuff, I think he was, let's say, more hopeful than anything else, because it just didn't make any sense. And I think he knew it didn't make any sense at the time. So I think it's a big claim. So if it has been improved, upgraded, then that would be good news. I always think this sector is like, you want everyone to be successful, but you need to be a dose of realism as well, and a whole bunch more honesty about how that happens, or it has such a negative effect, further down the line if we get failures, because people lose money, which I think investors in this market, exploration market, it's a numbers game. You will lose money,
but it's the type of stuff that's going to be. I mean, we need the technology, right?
For sure.
We need to find cheaper ways to do this, especially as we get into the lower grade, harder to find, harder to process stuff. We do need that kind of technology.
But I think it's like all metals, right? It's always going to be the case that the lower grade stuff is, marginal, and therefore the smallest thing going wrong can be terminal. So the better quality assets, better quality projects, better quality management teams, technology will help to a degree, but you kind of get the fundamentals right before you kind of hits the technology curve. And obviously price is a cure all at all times, right? Because that'll cover up a multitude of sins. I guess that's the thing that we would look for when we're investing is, is this low quality asset, in which case it may have some value in the future, but let's not price that in now. Where, and I think that's what we're seeing a lot across the US.
Well, that was Consolidated Uranium's play, right? They were picking up assets all over the planet, to warehouse for a better day.
Australia, Argentina, absolutely. Looks like Australia may come good, sooner rather than later. That's potentially nothing firm yet. I think there are US assets with energy fields we've just discussed, and obviously whatever's going on up in the Athabasca Basin for them as well, because they've got a lot of projects. So I think there's some really interesting business models out there. Which that's the bit that intrigues me about someone saying we've got the right people to be able to play this market as it stands now, but also hedging against what may happen tomorrow with price, with geopolitics, etc. So I think it's fascinating, but I prefer those sorts of stories to an exploration play, which is just, we don't have much money, we'll just kind of hang around here trying to drill where we can. You must have come across, you must have been there at one point, because you've turned around and gone, I tell you what, Cameco, Orano, partners, lovely, it solves a lot of problems.
And I mean, when those projects came up, those are projects we earned in on, actually. And that's why we still operate them today, is because they were projects we were operating out of the gate. And then, of course, NextGen and Fission lit up next door. That was very fortunate for us. And when those projects came available, I think the idea at the time was, I don't care what the project looks like. We need these people as partners. We need to win this. And that was the way we went into this project, getting those projects. And obviously it's served us well. But you need those types of things to in the long haul, because they've been financing those projects to a large degree, and that's kept things busy and kept things moving for a better time.
Well, amen. I think we're seeing a lot of companies like partner with another Australian group who've got money now, but then struggle to raise money later on. So it's that kind of the balance sheet approach to valuing the balance sheet for the future is really, really important. Likewise, Orano, Orano has got well documented issues in Niger at the moment. What's the knock-on effect of that? Because I hear and understand that they're going to be eyes down in Canada, even though it's more expensive.
I think what it is the way that they run the business is that they want so many pounds in the ground. They always need to maintain so many years of product in the ground, in whatever state it's in. And it seems to me they pulled out of Australia for the most part over the last umpteen years as well. And so then with losing Niger, that does put a big hole in it. And I think they've got assets in Mongolia, and that becomes something that becomes difficult to rely on. So, they need sturdier assets, and that's bringing them to Canada. I'm not sure what I know they're I don't know how active they've been in northern Canada, up in Nunavut. There's product there. There's more to be found, I think. But we get a sense that their exploration side is under a lot of pressure, and they're being handed bigger budgets to get out there and shore up the asset side of this thing.
Hearing the same thing.
Yeah, is a good thing.
Hearing the same thing. It's interesting times. Okay, and finally, if you don't mind, obviously the markets had been under uranium stocks, and the markets more broadly, but specifically uranium stocks have been under a bit of pressure in the last month. But sort of, again, bad news, good news out of Kazakhstan. It's just keeps coming.
Well, yeah, and I'm not sure anymore how Kazakhstan is affecting the North American markets anymore, right? I mean, they've tied up all their uranium, and they're now starting to charge more for it. But we're going to wind up with a two-price system, I think, on the fuel side, and Kazakhstan's now charging more, and which they're going to be able to get away with. So I think we're going to be looking at two prices at some point sooner than later, an Eastern and Western price. and Kazakhstan's going to become less and less of something that anybody can lean on in the Western world.
Yeah, it feels like, I think that I've spoken to different people who've got very different conclusions about what.
Remember, they came out of nowhere too. In 2000, they were producing that much uranium, and the world was fine. The world was producing enough uranium to run all the reactors that they had, and then all of a sudden, Kazakhstan came out of the gate with low cost uranium, started dumping it on top of everything everybody else was doing. And when they
that's true, but then so many things have happened. We're now anti fossil fuel. We can't burn coal, even met coal, for steel making. That seems criminal. Apparently, oil. Well, we're seeing just stop oil campaigns all around the world. So if people want new forms of energy, we're gonna have to, as governments, maybe move a little bit quicker than we are, be a bit more supportive in however way they.
I'm not sure how much we're going to be able to rely on the government to
that's the scary thing.
Rev up the engines.
Literally their job. Literally their job. I don't mean nationalization. I just mean get out of the way.
Well, and then what's the end game here? I mean, what's going to happen? I mean, in 5 years, are we going to be looking at $300 uranium? Because it really feels like that's where it's heading. Is that the demand for it is going to get insane? The squeeze for fuel. I don't know.
Yeah, well, whatever that number is, okay, whatever that number is,
whatever the number is, we know there's not enough uranium. We know there's not enough uranium to fuel all the reactors that are coming online, and then actually, when you start splitting the world, so you don't have access to all the uranium that might be out there, you got to find your own. It really is going to be a problem of acquisition, and which will make the price go stupid, and how that trickles down to the likes of us, I don't know. I guess that's what we got to wait and see, because it still doesn't get rid of the fact that what we do is a long-tailed, highly expensive process that a lot of people don't have the patience for.
Well, Ben, I guess those who have pounds on the ground will do better, but you got to prove that up. And sort of knowing that, does that sort of inform your strategy going forward for your business? Can we expect to see more JVs?
Again, we're in the finding business, right? We're not a mining company. We're in the finding business, and to turn an exploration company into a mining company, you have to get rid of everybody and hire a whole new set of engineers and metallurgists and the like.
No, that's what I mean. My question was really specifically about, if the pounds above the ground are, but let's pick a number, 300, right? $300. That means the pounds on the ground that have been discovered that have some kind of resource, that have some kind of economics on them, will be worth a lot more, right? So from that perspective, is it important that you move one or two projects along to more advanced stakes, because that will drive value, or do you maintain a large portfolio where you want to remain in control of it yourself?
Well, only if you find something. Right. I mean, right now, until we actually make a discovery if we start to tap into something that appears to be a deposit or appears to be a discovery, then yes, all of your focus goes on proving that thing up. Absolutely. Until we get there, it's a matter of reprioritizing all the data we've got. Every drill hole, every plane that we fly in the air, every leaf we pick up and send in for assay, reprioritizes where we're going to put our focus, because the end game is to find a deposit. Now, again, we've got partners who can't get out of bed for anything less than 100 to 150 million pounds of a deposit, but that doesn't necessarily hold true for the likes of us. And certainly, if the price of uranium is going through the roof and there's high demand, we're going to be able to find things that are economic. Might not be economic today, but tomorrow they might be pretty attractive. So. I get asked a lot about, are you looking at too much? Are you looking at too much stuff? Where's your focus? Again, when you start to find something to chase, then you absolutely, you aim the guns in a different way, and you start putting everything you got into it. And that's kind of what, to tell you the truth, we were working quite heavily on Red Willow. Now it's Turner. Why? Because the folks next door just found the highest grade deposit in the planet, and it's attached to 3 or 4 other things that are going on there, and it comes right across the property, and we haven't looked at it in enough detail yet. So yeah, we've this year you'll find that we've spent far more money on that project than anything else in our portfolio, because we have to maximize the odds. And it's only because of all the work that we've done historically and all the money we've spent on understanding from a geophysical standpoint and from an area standpoint what's there, that we're allowed, that we can now go in there and drill fairly precisely and find things to follow up on. I mean, for instance, we've always known that there's a big structure that runs through that area. Nobody knew where it was, but we knew it was there. And this last drill program, we nailed the thing, surprisingly. But we know where that is, and it's the kind of structures and things that we look for. It's a 50, 60 meter offset, for crying out loud. It's not small, but it just happens to run right along a claim line. So, and then off again. So that's why nobody's found it to date, which is because of the elbow room we had to go looking for it. So it's a myriad of things that take us there. But just because we have a lot of projects doesn't mean that we're, not focusing on the right stuff and
maximizing the odds, Chris. You're maximizing the odds. I like it. I like that phrase.
We have to maximize the odds. Sure, we've spent a lot of money on geophysics on other projects over the last 3 or 4 months, because they might be next. So we'll just keep working the odds.
Keep working. Good man. Chris, I appreciate you joining me today. It was a sort of, I don't know. It was a slow week for uranium for me, apart from the Kazakhs making that announcement, the shares bouncing back up, demand drivers increasing, and the abject failure of companies around the world to actually get into production. So really slow week.
We're also the last week we did also see, well, it was slow. We've seen a lot of news around India and Russia now getting closer and closer.
Yeah, we talk about that all the time. The US tells India not to have that conversation. So of course they went and had that conversation. Of course China are having conversations. Of course African assets are there for the taking from Chinese companies, and sure the Russians are selling their technology into lots of countries. So the world moves on, and the geopolitics of this continue to be absolutely enthralling. And the other thing is the human resource
right now. We're seeing a real struggle for people. Know what the hell they're doing in this.
Let's save that for next week. Save it for next week, because like I said, I think you can sit here and talk for 12 hours about all the failings of the space, which, as we joke about, is also part of the upside here for those participants who play the game properly. There is a lot of upside. Scarcity is a real driver for this space, because demand isn't going anywhere. But unfortunately, there's the supply at the moment other than East. So there we go. Chris, look, I'm going to leave you. Let's catch up next week, okay?
Will do.
Ciao, ciao. Bye.
Thank you, Matt.